that my explanation for what is $1 trillion in credit is money that will never be paid back in one generation. Well, we have that situation globally, and I think we're at the cusp of big change because interest rates on the long end of the curve are rising globally. Wealth doesn't disappear, wealth transfers. So it's more important to figure out where's it transferring to. And this time, what we have is the biggest wealth transfer ever, because we're witnessing the wealth transfer from the credit bubble back to real money. Because in 2008, as a lender to the bank, if the bank had gone bankrupt, you would have had first dibs on the assets of that bank to be bailed out. Now you are the last to hold because now you're a shareholder of the bank. So your savings at the bank are not your money. This is a decentralized ledger. And to me, that was immediately the light went on, because what is a bank? A bank is a centralized ledger. It's the centralization of the information of your money. You have to be aware as a pensioner that you face the same dilemma as the Argentinians did in the 80s, as the Venezuelans did, as the Russians did when the Soviet Union falls apart, as the Germans did. And what is that? That you're still going to get your $1,000 a month in your ruble or your peso or your Deutsche Mark or your Canadian dollar. But in that reset, that $1,000 a month is only going to buy you maybe $100 or less in purchasing power. That's why it's important to start thinking out of the box. If you haven't figured out as an investor that there's a bit of a tremor going on here and there could be a massive earthquake coming, well, I think you have a problem. You have to understand that everything is reestablishing itself. The top 9 currencies priced in gold, well, they all look parabolic. It's doing the same thing. Gold in Canadian dollars are $5,000. Gold in US dollars is at 3,400 now. But don't forget that the Canadian dollar and the US dollar were at par a couple of years ago. So gold is signaling exactly what's happening to the currencies. And behind that comes the whole credit bubble that we have. That's what everybody's holding, is without thinking, they're just 60-40, meaning 60% in equity, 40% in bonds. Well, in order to survive the inflationary period of the 70s and 80s, you had to switch to a 30-30-40 model. Back to a sailing analogy, you can't control the weather, but you can control your sails. And in this environment, everybody's just sailing full tilt into the storm with the old model instead of adjusting. Another important thing as well is that it's funny, central banks are the only entity that can not use proper accounting laws. So they've been leasing out their gold, but they call it an asset instead of a liability. Gee, I wonder why. One was Egon von Greyer's out of Switzerland made the same point, and Rick Rule made the same point. One from the equity side, the other one from the dividend side. I think now it's inevitable that we're going to go through a proper currency reset. If we are in a currency reset and I'm invested, I'm not getting out of my investments for a long time, because I'm going to let the dividend pay out and then use the dividend to buy assets.
I'm your host, Farzin Irani. Let's connect the dots. Our guest today is Jaime Carrasco, who is a senior portfolio manager at Harbourfront Wealth Management in Toronto. He's a Canadian investment professional with over 30 years of experience providing wealth management and investment counsel to affluent families, businesses, and institutions both in Canada and Latin America. Jaime's mother tongue is Spanish, but he also speaks English, French, and Italian fluently. Welcome, Jaime. It's a pleasure to have you on our show.
Thank you for having me, Farzin. Nice to be here.
It's always a pleasure to have guests like yourselves from around the world. Hey, Jaime, we generally start off our shows with letting the audience understand who Jaime is. So in your own words, could you tell us a bit about your background and how you got started in the financial markets?
Well, you know what? That's a long road that we already crossed through the years. The more I look back, the more wondered I am as to how I've been able to be here for so long. But I ended up in this industry through mentors. I've always believed that life is more like a river and we should swim with the current. And that's pretty much what I did. I got interested in finance and more because of the history of money than anything, because I love history. History is really the basis of how I see the world. And chatting with senior equity analyst for Central Guarantee years ago that I met through sailing, which is what I was doing to university. I got just talking to him, I became very interested in the business and how money functioned, and that's how I ended up. Really, at the time in the late '80s, you didn't need a CFA, you didn't need an MBA. I talked myself into first into Merrill Lynch, where I did the training course, and then into the an institutional desk with a company called Gordon Capital here in Canada, and I became a repo trader, which it's really the basis of how I see the world to some extent, because at the time, my mentors on the bond desk, repo is the basis of all derivatives, repurchase agreements. This was before they unwound Glass-Steagall, and the guys that taught me the business, my mentors, were really the last generation of bond traders to have worked under a gold standard. And to them, gold was the basis of money because gold was traded on the bond desk. So early on, they always saw the world differently than generations or investment professionals after me, which have a generational gap because they've started working and have lived in a fiat environment where money is backed by nothing, right? Versus my mentors in the business that had lived in a world where money was backed by gold. So it was a very big um, view, a very different view, divergent view of how money functions. But it was always on the basis of how they taught me to think, especially when it came to repurchase agreements and debt and the problems today in the system as well, because they always said that the bubble that had started building back in the 1980s was sooner or later going to blow up, and here we are.
We sure are. And that is exactly what we're going to chat about today. There's something you touched on there. You said understanding what's happened in the past. And I've heard you on one of the podcasts previously, and I'd love you to just share with our audience something about your childhood, which they might not know. You obviously grew up in Chile and you live in Canada now. So could you give us a little bit of a background on your childhood and what have you learned through those conversations and what transpired?
It wasn't really my conversations. It was actually the conversations between my father and my grandfather. My father was a communist, but he ended up marrying the daughter of a very big industrialist in Chile who funded the infrastructure for the mining business. His brother was part of the government, and and it was the conversations between my father and my grandfather that always struck me. They had a lot of respect for each other, but my father would always be talking about the people, the employees, the workers, the labor, right? And then my grandfather would always be arguing about the capital. That Lucho. You can't have companies without capital and workers. What about the capital? So they always had this ongoing discussion between the two of them, one versus the other. It wasn't until I started working in the business that I realized that they were both talking about the same side of the coin, not understanding how money functions. And I think that was something that really struck me years later when I realized gold and how money functions. When I started working in the financial business, I began to put the whole puzzle together in terms of capital and money, and the obfuscation of the value of money through money printing because of the fiat system. It all started to make sense as to, put it very simply. Look at Canadians, for example. We work, and everybody in the world, because there is no currency that is backed by anything tangible anymore. But as people, all we have is our labor power, our ability to earn an income. But that income is being taxed away by the government, and it's also the purchasing power of that income is being diluted more and more through the money printing and everything that's going on within the system. And I think that's the important thing, because I've been able to gauge that, and now we're at the end of the road. A great example of that is that if you look at minimum wage when it was first established, Uh, I think it was $1.50 in the US. Well, $1.50 then would buy you the equivalent of about $150 today. Well, that $150 is what the minimum wage should be to have the same purchasing power as it did before. Well, here we are arguing over 15 or $17, right? So it's still not enough to buy the same basket. And that was the disconnect that my grandfather never understood. And another thing that's very pertaining to Chile. So one of the reasons why we end up in Canada is because in 1973, September 11th, 73, there was a coup d'etat in Chile with a president called Allende, who had nationalized the copper business, the copper industry in Chile. And because of that, American policy, well, we don't want a communist. They set up a coup d'etat, they kill them, replace him with Pinochet, right? Well, what was the mistake that in my opinion that Allende does is that instead of nationalizing, if he had seen the world through my eyes, I would have advised them to forget about nationalizing copper industry. It would have been a better play to just monetize copper to the Chilean peso and everybody wins, because that would have forced the world to buy pesos first to buy our copper. And I think the tangibility of money, once I figured out the puzzle, became important. And that's why I like gold. Now, gold and copper are two different assets. The importance of gold and silver is that they don't rust. Copper rusts and it has a much greater utility, but you kind of have the same thing with oil. You have the same setup, and I think that is part of the shift that we're going to see today, because one of the things that history teaches is that we always go back to a gold standard because we go through these periods of credit cycles. The fiat system is funded by credit, and that credit will never be paid back because now we're looking at trillions of dollars. What is a trillion? It's funny because when we talk about stars, we never talk about trillions, we talk about billions. It's more stars than there is in the Milky Way. It's like it's an amazing number. We don't fully understand it, right? And because of that, my explanation for what is a trillion in credit is money that will never be paid back in one generation. Well, we have that situation globally, and I think we're at the cusp of big change because interest rates on the long end of the curve are rising globally. They're rising in Japan. They're rising in the U.S. They're rising in England. They're rising everywhere. And that is the important catalyst that we're witnessing today, that I don't think people fully understand the credit cycle. There's only one thing to understand, though, first, in a nutshell, is what JP Morgan said in 1913. Gold is money, everything else is credit. And that credit bubble is bursting globally.
Yeah, perfectly said there, Jaime. Um, People just seem to repeat history. I don't know if you've read the book called The Fourth Turning, but that
Of
obviously is,
course I have.
yeah. So people who understand cycles, as you said, the credit cycle is bursting, the currency and what it was in the past when it was gold backed and stuff like that. I think history repeats. As human beings, we make the same mistakes, whether it's the example which you gave of communism or whether it's fiat currency in the future, in the past. Every currency has gone to zero or been hyperinflated, right? So
Every fiat currency.
yes, yes, every fiat currency has kind of gone to zero, as the Mises Institute also puts it. But let's come back to talking about the public debt, because what I also try and explain to people that public debt isn't growth; it's actually a burden on society.
Well, the easiest way to explain that is this: that if you look at society today, and a lot of people don't understand this. The way that I explain it to people is, look at Canada. You have a lot of people with $3 million homes, but if you have a $5 million mortgage against that home, which is the real number, that wealth that you're seeing of living in that $3 million home is really worth nothing because you still owe 2 million net. Well, that is the problem with society today. Like, look at Canada. Canada, I don't know where the money's coming from, but we're making promises to every country that we're going to help them out. Well, that's being printed, and that printed money is coming off of our tax burden, right? So that bubble cannot continue. Now, what's important though is that at the core of the change that we're going through today, it's not so look at history, right? Look at what happened in Venezuela in 2019, what happened in Argentina in the 1980s, what happened in the German republics in the 1930s, the Weimar Republic. It was the fiat system blowing up where, the only way forward was to print more money or devalue the currency into a new currency. The problem today is that it's a US dollar that has reached that point. The debt bubble is global, and so led by the fiat currency. So we have to unwind it. And I think that when you look at when I started talking about this back in 2015, everybody just couldn't conceive of what I was talking about from a currency reserve shift that was coming. Well, if you can't see it today, you better start looking, because it's clear the ship is sinking, right? We have the move to gold by the BRICS. You have the power shift that's occurring. You have the Europeans, living in this utopia that they think that they can afford to retire at 40, 45, whatever the age is. But where's the money going to come from when they owe so much money, right? So everything's up for reevaluation, in my opinion. And I think it's time to start thinking out of the box for investors and start positioning yourself. Because the one constant that I learned in the financial business over the years was that wealth doesn't disappear, wealth transfers. So it's more important to figure out where's it transferring to. And this time, what we have is the biggest wealth transfer ever, because we're witnessing the wealth transfer from the credit bubble back to real money, right? I think it's inevitable that gold is re-entering the monetary system. And I think it's a beautiful thing for those that can look at that can see the world from out of the box thinking, because the whole purchasing power of that credit bubble has to transfer to the total gold reserve shared by central banks, because that is the shift of the value of the global economy. If we're going to do trade settlement with that global trade, what should the gold reserve be worth to replace the credit bubble, the size of the credit bubble that we have today in relation to the global economy? And I'm not going to tell you the number, but I can assure you that that number has another zero behind $3,000 gold. And that's the opportunity. The opportunity that, as that occurs, and it's inevitably occurring, it's silly to think that, no, that's not going to happen. It is happening, right? Look at the BRICS. They already have a platform in competition to the SWIFT system, which is how the U.S. How the U.S. dollar trades. That's already running. It's called the Bridge. So the pieces of this puzzle are already setting themselves up. It's no longer theory. It's in place. It's when do we have the checkmate, and it occurs. Now it's the when, right? So I've been preparing for it for a long time, but within that power shift, within that um, that uh, that historical replaying of the game, there's a lot of wealth to be had as everything transfers. And it happened. It happened in the 1930s. It happened in the 1980s. It's happened in the past, and there was a lot of benefit from getting ahead of that curve and positioning yourself accordingly.
It is a good point you made out there. I think myself and you being in the finance industry and people I interview as well, most of us thought during 2008, after the global financial crisis, that we possibly thought, I at least thought that the system might collapse under its own weight. But they obviously kicked the can up to the governments, and the governments took on more debt and they liquefied the system more. And as you just mentioned, the debt system or the credit system is coming because debt on one end is credit to the other guy. How do you think the monetary reset falls into place? Because the other thing you also mentioned in there, we'll touch on the BRICS and we'll go towards the BRICS and all of that. But the Ukraine-Russia war, the way I saw it is the day they froze the Russian assets, most central banks started buying gold. That is the visible sign that most people saw, that the central bank started selling off the US treasuries and started putting gold on their balance sheets. But I saw something as a sign even before that. If you remember in Basel, after the global financial crisis, they secretly changed gold to a tier one asset, which was only the US Treasury. And then I read up on that. Quite a few years back, they changed gold to a tier one asset. Do you think the central banks knew beforehand? And obviously, the countries like Germany were repatriating their gold. Do you think these guys knew it's coming? Hey, the monetary system's collapsing. We have about 4, 5, 7 years. Let's start getting our gold back. And obviously, Basel also put it as a tier one ratio. What are your views on that?
It's funny because, well, you asked me a couple of different questions there. So let's separate them for a second. The switch to tier one asset, I think was inevitable. A more important undisclosed event that occurred was November of 2015, when they quietly changed the rules on your savings at the bank. And it happened in 2015 because in 2014 we had the Cyprus crisis. And in order to bail out Cyprus, they actually took the money from Russian oligarchs that had their money in Cyprus. So nobody complained because it's the Russian money. But they actually stole the money in order to revalue the banks. So in order to avoid that, they changed the bail-in provisions in November of 2015. All G20 countries signed this. And what they said was that if you have your money at the bank, you are no longer a lender to the bank. You're now a shareholder. Why is that important? Because in 2008, as a lender to the bank, if the bank had gone bankrupt, you would have had first dibs on the assets of that bank to be bailed out. Now you are the last to hold because now you're a shareholder of the bank. So your savings at the bank are not your money.
And most people don't know that. There's a misconception where people think, oh, it's my money in the bank, but most people don't understand. Once you put that dollar in the bank, you have lent it to the bank, and that's why you're getting a return on it, or you're getting interest on your fixed deposits. And it's great you mentioned that, because obviously I get interviewed on a show in New Zealand as well, and I've been telling them for a long time. If you remember during the global financial crisis, because there was panic or what was happening in Europe, I was working in banking in Australia at the time, they had a government guarantee on bank deposits because there was actually a run on the banks. So the governments had
And
to.
you're a lender to the bank at that point.
Exactly. And what New Zealand did, and I keep bringing this up to my audience, is New Zealand and Israel were the only two countries who did not have a government guarantee on bank deposits. Still, New Zealand just introduced one in July this year, literally a month and a half back. They've introduced, and it's only for $100,000. But in spite of that, in New Zealand, we have this thing called OBR, which is Open Bank Resolution, which most people don't understand, is even though you have a government guarantee, as you just said, and I think it happened with, if I'm not mistaken, Deutsche Bank just last year as well, or one of the big banks that was swallowed up in Switzerland when it went broke.
No, it's Credit Suisse.
Credit Suisse. Yeah, they went, and all the depositors, or at least the big ones, were turned into shareholders. What's the point of having shares in a bank that has just gone bust?
Well, the other thing is, hold on, let's keep going with, I don't want to become a conspiracy theorist. I just want to lay out how the chess game has set up, right? Which I think is more important. So what's important to understand is this, is that, first of all, when it comes to the government guarantees on the banks, there's more money than there is on the guarantee. So is the money going to be there? I don't know. My attitude has always been to advise clients as I see the puzzle setting up. And one of the things I always say is, you know what, if you have some extra savings at the bank, why don't you buy some physical silver and put it away because you might need it one day, right? So have some savings out of the system, right?
Out of their system, right? Out of their monetary debt-based system, yes.
Yes, out of the system. Well, it's a system that I have. I have to keep my money at the bank, and we got to function within the bank. But there's things that the individual can do to position yourself, right? And that's one of them. Have some savings in physical silver or gold out of the system, and keep it at home. Now, the wheels of history are turning. One of the other things is in 2009, I actually did say 2008. I thought 2008 was going to be it. But then they bailed out the banking system. And that was the important catalyst, because that means that they transfer the bad credit from the banking system to the government. So the next question is, great, who's going to bail out the government this time, right? And that's the problem, that when it comes to bailing out all the governments, nobody's going to bail it out. That's why in 2015, I said, okay, we're heading to the reset now. Now, I thought everything was over in 2018, but we got saved by COVID that allowed for all this money to be printed. And so now we have an even bigger credit bubble, right? So all they've been doing is accelerating, inflating a credit bubble to a point that now I think the big players, and I'm not talking about you and I'm talking about China, Russia, the BRICS, all of the central banks that are buying gold like crazy. Well, that is happening, and that's been happening for the last 7 years. So behind the scenes, governments and central banks are setting up for it, the nationalization, the repatriation of gold, right? This is happening no matter which way we look at it. So the transition to sound money again, whichever way it takes, is it going to be the gold standard of before or whatever? I think blockchain will play a part of within that, and you're starting to see that with mbridge, the platform that the Bank of International Settlements set up for China, so that they can do their trade settlement outside of the SWIFT. Well, that's a blockchain based platform, right? So we're using the new technologies for the future. I find that very, very optimistic, because in the way that I see the chess game, I'm always thinking a couple of steps ahead. And I said a long time ago that my blockchain is a very liberating technology. Why? I read the white paper and I immediately said to myself, "Shit, this is, excuse the cussing, sorry.
It's okay, man.
Oops, this is a decentralized ledger." And to me, that was immediately the light went on, because what is a bank? A bank is a centralized ledger. It's the centralization of the information of your money. Let me rephrase this from a historical perspective. Banks got invented thanks to Gutenberg, who invents the printing press. So that allowed the wealthy guy in Holland to be able to travel to Naples with a piece of paper that guaranteed that his money that was sitting in Holland was transferable to his money in Naples, so he could do his commerce. Well, that piece of paper gives the bank centralized control over your money, and nothing's changed. Since Gutenberg invented the printing press, the banking system has functioned the same way, in that it's a centralized control of your money, so that when you go and pay your bills, they guarantee that it's your money. Well, guess what? All of a sudden, we have a technology that does to the banks what email did to the post office, because now we have a decentralized electronic ledger that, even better, can be plagiarized, because they might not be plagiarizing the value of your account, but they're definitely plagiarizing or demonetizing the value of the money that they control through the central banks by printing more and more, right? But now we have a technology that will offset that. So how do we rebuild the future? You know what? I find it, I think it's going to be great, because now we have a technological solution for an old problem as we rebuild. But the pieces of the puzzle are falling together. The other thing is that one of the problems with the world that we're living in, and I'm talking about a fiat system, is that the net result of that is the decimation of the middle class. If you don't think it's happening, you better wake up and look at your societies, because that's happening global, right? I see it in Toronto, the level of unemployment, the level of people already living in what I would call shanty towns, right? Which we saw in Chile, in growing up in Chile. Now it's happening in North America. Look at the U.S. Look at L.A. Right? So we might not want to accept the devolution of the middle class, but it's happening, right? A good example of that, the movie Wall Street, which was set in 1987. There's a great quote when Gecko says to Charlie Sheen's character, "Look out there, right? 25% of the wealth of 25% of people control 1% of the wealth." Well, guess what? Today, that control is 1% of the population. So that even has, since 1987, we have had more control of the big wealth for those that can access the money of the central banks, right? So those sociological pressures goes hand in hand with the four turnings, or the what Kondrativ, the Russian economist that figured out the economic cycles over 100 years. It's the same thing. We're into the winter. We're into the fourth turning, where debts by default have to be rebalanced, and that creates a power shift that those that can figure out how to surf through that and position yourself have have historically done very well, and I plan to be one of those. And that's how I advise my clients. But you got to be able to think out of the box and be able to see the changes that are happening and how to position yourself.
Yeah, it's funny. I think in the Western cultures, people haven't learned, and I've always said to my audience, I think yourself in Chile. I was raised in India, but I'm a New Zealand citizen, and I live there and elsewhere as well. But I think in the living in Western society, the population has been kind of how would I say, just more timid. They think their government is there to look after them. And I think now post-COVID, most people are waking up. They're going, what's going on? The inflation is coming out of nowhere. And why is my government doing dead stuff?
Yeah, I wouldn't call it timidity. I would call it just the fact that life has been easy because we've been taking advantage of that $1 million line of credit to have a good life, not realizing that eventually we're going to have to pay back that money, right? And as that credit squeeze kicks in, you're going to be in trouble, right? And we're going to go through the same situation as Venezuela, as Argentina, and the social pain that has to occur because eventually the purchasing power of the currency is going to it's going to continue to devalue and eventually it will be replaced as it always has throughout history.
I was just going to say, so when you're saying, obviously, we've established talking about all of this, that there's too much debt in the world, and regardless of whether it's Western or Eastern, Jaime, how do you see this playing out? What options do governments have to solve the problem on their hands now?
Well, they're not going to default on their debt. They're just going to devalue their debt as they reset the system, right? So I live in Canada. I know Canadians are very dependent on their pension plans to retire on. Well, I think that you have to be aware as a pensioner that you face the same dilemma as the Argentinians did in the 80s, as the Venezuelans did, as the Russians did when the Soviet Union falls apart, as the Germans did. And what is that? That you're still going to get your $1,000 a month in your ruble or your peso or your Deutsche Mark or your Canadian dollar. But in that reset, that $1,000 a month is only going to buy you maybe $100 or less in purchasing power, right? Which is happening. It's happening. You see it on your bill because all of a sudden we have a completely new monetary system where the purchasing power of that new monetary system is much greater. So a clear point in time when that occurred was May 5th, 1933 in the US. What other people don't understand about Roosevelt, what he does on May 5th, 1933, is that's the day that the good as gold dollar is born, right? So they have a bank holiday. They shut down the banks for, I think it was 10 days. And when it reopened, it was a completely new system. Well, prior to that system, they had the continental dollars. And those dollars, by the way, they had to do that for the same reason as today. You had the First World War, then you have the 1929 bubble, then you have this massive credit bubble, and now you got to reset it. So what do? They took the gold reserves of the U.S. at the time, 8,900, and they move it from first to $22, where they say to Americans, okay, sell me your gold at $22. A lot of Americans did. And then a little bit later in May, they reset it to 35. Well, what they did was create a brand new pool of money, the good as gold dollar. But all the continental dollars get devalued by the same amount as the new money. So you still had those dollars, those those dollars prior to that date, but the new money was where the purchasing power really grew. Now it's funny because after May 5th, 1933, you couldn't hold gold in the US, right? Because you could hold the dollars that were backed by gold, but you could still own the gold companies. Now, the gold companies made out like bandits because all of a sudden they're still producing at $5 an ounce, making $35 an ounce. And the dividends just went through the roof in those companies, so did the earnings. And so when we go through those transitions, there are ways to position yourself to benefit. I think the same thing's going to happen globally now because we need to reset. The US can't continue. Think about MAGA. What is Trump trying to do? First of all, he's going back to a mercantilist system like similar to the 30s, funded by tariffs. The next thing I think he wants to do is to defund Washington. And the best way to drain the swamp is to cut off their funding. So if you cut off taxes all of a sudden, well, where's the money going to come from for big government? He offsets both. Then the other thing is this whole argument about firing the Fed governors. Well, guess what? In a sound money system, we don't need a central bank. You go back to the Treasury. That's why it's more important to hear what Scott Bessent is doing, because the central bank is not needed in a sound money system. All central bankers are going to be out of the job. We might still elect one as prime minister here in Canada, but for all intents and purposes, in that sound money monetary system, we won't need a central bank until we need more to create more debt. Hopefully, this time around, though, it'll be a couple of generations that are going to forget before we forget the economic pain left behind. Just like in 1930, that economic pain it took what, 2 generations until the baby boomers of the 80s really to forget about the economic pain of the 30s, right? And that's why the four turning as well is so important, because it's also talking about the demographic cycles that are occurring over society and how much we forget as people, right? That's why history is so important. History and economics, those that understand it, as Ray Dalio said, if you don't own gold, you don't understand history and economics, and you probably shouldn't be in the money business. I added that at the end, but it's important to understand.
No, but it makes sense. And in the Western financial system, you and I have been in the Western financial system for quite a while. When I worked in banking and right up the food chain, they don't talk about gold. No, nobody wants to talk about gold. In fact, in your pension system or your Kiwi savers, what we have in New Zealand, Australia, your superannuation funds, they don't want to talk about gold. In fact, when you talk to a financial planner, they're like, "Are you silly? Not gold. It's too risky." It's it it's actually defying common sense. But I think favorable to yourself and I is we had parents and we had grandparents who have lived through this, and the stories are passed on. Whereas in the Western financial system, it's seen as put your money in the bank, earn an interest. Why would you buy gold or silver and have the cost of actually storing it in a vault?
I think you're making some really valid points. One of the problems that I see is that, first of all, returns have been easy because of the influence of central banks and the printing of money have really functioned to move the markets higher and higher and higher. So people haven't bothered to have to think about, oh, where are the returns coming? Back again to that $3 million home against a $10 million mortgage.
Or a $4.3 trillion valuation on shares right now.
Exactly, right? So it's the same thing. One of the things that I learned early on was asset allocation, how 80% of portfolios return comes from asset allocation. And within that asset allocation, for that 200-year period, gold was always essential. And you needed to have at least a 7% allocation to the sector or to gold and silver to properly allocate money, right? Well, that's what they forgot. Right now, nobody's in it because it's a pet rock. It's whatever, they've just forgotten. But again, that's a reflection of the good times. They haven't seen the pain yet, and it's through the pain that they're going to learn that, right? So that's why it's important to start thinking out of the box. If you haven't figured out as an investor that there's a bit of a tremor going on here and there could be a massive earthquake coming, well, I think you have a problem. You have to understand that everything is reestablishing itself. Everything is in transition. Everything, right? Look at Europe. Look at the how are they going to fund these promises that, oh, we're going to retire at 50, 60, whatever the age is, but where's the money going to come from to fund that? You won't be able to, right? So yeah, I think it's more important to take the rose colored glasses off and start assessing what is the what's what. And it's funny because the clients that I have are coming to me because they're thinking out of the box. They're starting to assess that, hey, something doesn't make sense, right? How do I position myself? The problem with the money management business is that it's been so easy that advisors haven't had to think too much. And I see another problem that actually is very reminiscent of when I started in the business, because having started in the late 80s, I went to the Merrill Lynch training. And what we taught was how to pick stocks. Why? Because by 1987, 88, when I started in the business, we're at the tail end of the inflationary wave that hit us in the 70s, right? So prior to the 70s, from the 50s on, you had what was called the Nifty 50 period, where everybody was making money. You had the baby boomers coming back from the war. You had this massive growth. And that's when the mutual funds get created. That's when Templeton's managing his fund. But you could throw money at a dart and you made money because of the flow of money back into the system. Well, then we get to 1973, 1975, the inflationary wave. Not everything, that flow of money stops. Now you got to learn how to stock picks, because even within a good sector, you have to find the right company, right? So we're at the tail end of that. And so I started at a point in time where, first of all, I was lucky enough to be taught about gold, but I was also taught to stock pick, right? So look at the precious metal sector, right? It's funny. Newmont finally broke out. Barrick is just about to break out. But if you had done proper stock picking, Agnico Eagle was $60 3 years ago. Now it's sitting at $200 today. It crossed 200 Canadian, right? Well, it's down right now at 190. But same thing, if you had picked the right stocks, you beat the market. And why is that? Because when we get into that inflationary hit, not everything's working. And you have to learn how to pick stocks and think out of the box again, out of the collective versus it's back to collective thinking, which is what we're going through. But you got to learn the right tools to be able to make it through.
You said something about inflation there, Jaime. I actually believe, obviously, the government's lying about the inflation even right now. They were lying even after COVID when inflation peaked, and they're telling us inflation's come down. And I've spoken to my audience and I've said inflation's really not coming down. We're actually going into a stagflationary period, as you can see in most Western democracies. The economies are slowing down, GDP is going backwards, but people are still losing jobs. And the central banks and the governments are lying. And I know in USA they used to falsify statistics openly. And recently Trump has also fired the head of the PLS because the government has been lying about whether it's inflation or the job numbers. Do you think when the times where governments are running out of rope and the average citizen now knows what's coming, as you said, you and I, people who can already see something is not right in the system. And I talk to people also who know something is not right. And they're like, can you help me figure this out? And that's what you and I do, obviously. Um, but do you think the average person is going to get wiped out? As you said, I'll just ask you one specific question because you did mention about Scott Bessent, who is the Treasury Secretary at the moment under Trump. Do you think he knows what's coming? And before US runs out of people wanting to buy their Treasury bonds, he's trying to come up with a solution?
He definitely knows what he's doing. And you know why? There was an interview that I posted that he had done in November of last year before he was appointed to Treasury Secretary. And in it, he says, my biggest holding is gold for the simple reason that the biggest issue that we face today is the credit imbalance between China and the US. Back to credit, back to everything. I think he fully understands what they're doing. They fully understand that. What I want to know, forget about all the noise in the U.S., is the gold still at $4 is really the key question. Because if it's there, the U.S. will be second in that power shift behind China, which is sitting with 20,000 tons of gold. And the U.S. will be second. But if the gold isn't there, we have a completely new mechanic, right? So no, I think he fully understands what they're doing and the fact that gold is in the system. And more importantly, if you look at the setup of the tariffs, everything that's happening, you're going to be able to buy things in Florida. I think next month, gold and silver become legal tender.
They're trying to, I think in about 7 or 8 states, they're trying to legalize gold and silver as legal
No,
tender.
no,
Yes.
it's not 7 and 8. It's about 30 states that have already passed legislation, or it's in place to. But why? Because gold and silver are in the U.S. Constitution as legal tender, Article 9. Now, again, here's another important historical precedence. Why is that it's embedded in the U.S. Constitution? Because the U.S. arises as because of the global breakup of the last time we messed around with a fiat system, which was France under Sue under the direction of John Locke, right? So these periods of time when we mess with fiat create such big bubbles that it completely rebuilds the global structure. And that's why they embedded it in the Constitution. It's funny because being a history nut, Chile's born at the same time, Argentina, Colombia, the US, all of the republics are born at the same time. Well, I'm visiting London once and I see a statue of O'Higgins, San Martin, Franklin, and Washington. And it turns out that in that area, in that neighborhood, they had all lived together at the same time. So they all knew each other, right? So when you start to analyze history and you look at the patterns, you're like, wow, this makes so much sense, right? Now, in that rebuilding, so assume we were having this conversation in 1775, and I'm telling you that the world's going to change, and you might even have a boat. You would have said to me, well, what's the king going to say about that? Well, guess what? The republic say, adios, king. We don't want a kingdom. We're liberating. Now, keep in mind that Canada never does that. They stuck with the king, and the head of state still the king here in Canada. And most people don't understand that we're still, for all intents and purposes, owned by the UK royalty, right?
The Commonwealth countries, the New Zealand, Australia, Canada's.
Yeah, I got in trouble at a big supper when I said that. Hey, what about if King Chuck Charles gives Canada to Trump because he owes him money? Which, you know what, we can laugh about it, but it could happen because we're still part of the United Kingdom. The head of state is the governor general, right? If Carney wants to dissolve parliament, he has to first go to the governor general to ask for permission. No different than what uh, who's the current British prime minister has to do when they dissolve parliament, right?
And his popularity is down to about 17 to 20%. Since you brought that up, can we go there? What do you think? What are your views on what's happening in the UK? Obviously, all government long end bonds interest rates are going down. But what's happening in the UK and France just recently?
You know what? Forget about politics. Just look at the bond market.
Yeah, that's what I meant. The interest rates going up, and yeah,
Whoever are the players on the political front, that's the game, right? That's the game that we're watching. What history is going to remember, and that's why Trump fascinates me, because from a historical perspective, I can assure you that 100 years from now, they're going to be talking about Trump in the same way that we talk about other historical characters. What's important, first of all, to remember is this: is that as watching this game is better watched from the comfort of the yellow brick road, right? Wearing silver slippers, because you're going to do much better. And by the way, the yellow brick road is an allegory. Everybody talks about the movie with the red slippers, where in the book, which was written prior to that, her slippers are silver. The road is gold. The wizard is the banker. The lion is the banking system. The tin man is industry. And the scarecrow is agriculture. It's an allegory not to forget the banking crisis of the late 1800s in the US. Back to England and back to that. What's important to me as far as England is concerned is that the weak link. So we're watching the end of the credit system, and I think that because interest rates are rising on the long end of the curve, it's really signaling that central banks are losing control, because central banks can only control the rate of money lending, of the overnight rate at which they lend to banks. However, there's so much debt that rates are rising. The first problem is Japan. Japan, the 30-year bond has crossed, I believe it's over 3% now. And that's important because Japan is the foundation of the credit bubble through what we call the yen carry trade from years ago. The weak link in this scenario is England. And so the rise in interest rates right now in England is important, because that's going to create problems within the banking sector. And also the LBMA, its ability to deliver gold and all that, it's all interlinked, because all that is dependent on low interest rates to fund all this. As they lose control of interest rates, they also lose control of the system. Then you have the US, which 30-year rates already crossed. Hang on a second. Whatever the number was, but they're still rising, and it's pretty high, right? And that's the important thing. So long-term rates in the U.S. hit 0.74 about about 2 years ago, I think it was. Now we're sitting here heading for 5%. People haven't yet woken up that, hey, long-term rates are rising, because everybody's concentrating on the Fed this, the Fed that. But to me, that is the signal that the credit bubble is bursting. And that's important. And another way to look at it is, if you look at the chart of gold, there's a chart that I post on my Twitter and LinkedIn on a regular basis, which is the top 9 currencies priced in gold. Well, they all look parabolic. It's doing the same thing. Gold in Canadian dollars are $5,000. Gold in US dollars is at 3,400 now. But don't forget that the Canadian dollar and the US dollar were at par a couple of years ago. So gold is signaling exactly what's happening to the currencies. And behind that comes a whole credit bubble that we have. So, I look at that, and to me, it's a massive opportunity. And I'm so happy to be positioned in the precious metals, in the monetary metals, at a time when nobody was paying attention, because I was able to acquire some of these assets at extremely cheap prices. And now I'm just patiently waiting. As Jesse Livermore, the top trader of the 1920s, said, buy right and sit tight. Well, that's exactly what I've been doing. And now I'm sitting tight with targets as to when I get out. But I'm very comfortable sitting on lifeboats.
It's just a example is when you said about the Canadian dollar. In 2011, I think the Australian dollar was about stronger than the US dollar, and the New Zealand was close to 90 something cents. And during COVID, an ounce of gold was about 3,000 New Zealand dollars. And just last week, it was about 5,900. So it's almost doubled in New Zealand dollars. And I want people to understand this, the audience to understand this. An ounce of gold is just a coin. It's still the same ounce of gold. It's not that the gold has gone up. It's actually the New Zealand dollar that has almost lost 50% of its value.
Exactly.
And this is what I keep talking to my audience as well, because you're in Canada as well. And you talked about the $3 million house, right? In New Zealand, Australia, Canada, it's been ingrained into our brains that you got to own your own house. And housing is the way to wealth and generational wealth that worked in the last 40 years, while the bond market from 1980s to 2020, the interest rates peaked at about 18%, I think went all the way down to zero or negative in Switzerland and Japan. And now the trend has turned, which you also mentioned, and the long end of the curve of government bonds, when interest rates are going up. Would you love to add on this? Obviously, the bond value is going down because there's an inverse correlation between the interest rates and the bonds. And I was talking to one of our guests about the 60-40 bond is dead because that's what worked in the last 40
The
years.
allocation model is dead. It's dead because the 60-40 model was exactly, remember I was talking about the Nifty 50 pair coming into the 70s?
Yes.
Well, that's what everybody's holding is without thinking, they're just 60-40, meaning 60% in equity, 40% in bonds. Well, in order to survive the inflationary period of 70s and 80s, you had to switch to a 30-30-40 model. 30% precious metals, 30% in fixed income, 40% in equity, right? And that's the switch that nobody's done, right? Everybody's still sitting on the 60-40 model. First of all, because they've been so busy parking assets, so I would say they're valet parkers without really thinking as to what's inside the pools of money. Right, because on top of that, they're not even buying stocks. What they're buying is ETFs, pools of money, and the banks that people are working over. They love that,
And the passive investing as well that's going on because people don't even know where their money is being invested.
exactly. So I love sailing. So the analogy I always say is, hey, you're sailing with all your sails into a storm, and you better trim back and adjust accordingly, because back to a sailing analogy, you can't control the weather, but you can control your sails. And in this environment, everybody's just sailing full tilt into the storm with the old model instead of adjusting.
Yeah, Jaime, I'd love to get your view on something. As you mentioned, China 20,000. I've heard someone like Alistair McLeod, who we're trying to get on the show as well, say that he thinks China might even have upwards of 30,000 ounces, and maybe Russia also has more than the US. But assuming if someone like people like us know and assume that China has more than the US, do you think it would be in the US's best interest? Because I was just talking to a guest recently in Switzerland, and he said it would not be in the US's best interest to actually do anything with gold, because if they do that, on paper, they have 8,300 ounces of gold, I think it is. But China and Russia have more. And in that system, the US would lose. What are your thoughts on that?
Russia doesn't have more. China definitely has more, and I'll tell you why. Along my career, I ended up working for Macquarie, which is the big Australian bank, and I was lucky enough to have traveled to the Perth Mint, and I'm in the smelting room, and I noticed that they were smelting into these smaller blocks in the big pound bars, right? So, hey, what's with this? And they said, oh, those are for the Chinese market. They work on a metric system, so they were kilo bars instead of pound bars. And then when I looked at the pound bars, I realized that the serial numbers are on them. And I said, so you know whose gold this is? And he goes, yes, but I can't tell you. And I said, well, what's going on here? And he goes, well, since 2008, we have smelted about 20,000 tons that have we sent to China through the Shanghai Exchange, right? So that's how I come up with that number. Up to that point, you have to understand when it comes to gold as a monetary metal, there's only three three smelting spots throughout the world: Switzerland, the Perth Mint out of Australia, and in Dubai for the Eurasian market, right? But Australia is mostly where China gets its gold, right, from Western market. So that's how I get to the 20,000. The other thing that's important is that China has been subsidizing their gold business for years at $3,000 an ounce because they knew full well that you weren't going to produce it at 1,000 or less. So they've been funding that, and that gold hasn't left. That's the gold that has been acquired by the Chinese central bank. So we know for a fact that China's sitting on over 20,000 to 25,000, including the 2,300, I think they've declared within their central bank. Now, that's how I come to that number, because I know that physical gold that has left central banks. Another important thing as well is that it's funny, central banks are the only entity that can not use proper accounting laws. So they've been leasing out their gold, but they call it an asset instead of a liability. Gee, I wonder why. Again, another thing that people just don't notice, right? Chile and Canada are the only two that actually stuck to proper accounting, and we sold our gold. We have nothing. Australia has 100 tons. Brazil has 100 tons, and that's internally. But there's a lot of unknowns to this. And that's why everybody's wondering, does the U.S. have the gold? I think they do, because it's not the gold that's in New York under the care of the banking system. The fact that gold of the U.S. is sitting at Fort Knox, it's because the Treasury can use the gold, but he who guards it is the Army, right? That's why it's at Fort Knox, Fort Meade, and Fort New York. It's the bulk of it is at it's at Fort Knox, but there's also at two other mints, right? Because the Army is the custodial and has always been set up by George Washington. So that's why I think Nixon wasn't allowed to exit more gold out of the U.S., because the Army said to him, "No, you can't have any more. This is Americans." So I'm hoping, if anything, I would trust the Army more than Washington, because the class of 1917. Ever heard of the class? The class of 1907, who graduated from West Point in 1907?
No.
Omar Bradley, Patton, Eisenhower, Marshall, and one more. The five top generals that fought the Second World War for the Americans all graduated at the same time out of Fort Knox. Anyways, another historical tidbit. But let's go back to the system as it resets. Well, gold is part of it, and silver, to me, is the prime beneficiary of that setup, because of the gold-silver ratio needs to correct, because that's set by nature and not by the whims of a paper market.
Yeah. Amy, we'll just shortly go into your investment thesis for the end times, but I just one last bit I want to touch out there. You mentioned that the gold might be in Fort Knox. Let's assume it's there. And what happened back in the days is the gold certificates are sitting on the Fed's balance sheet. And we talked about Treasury Secretary Besant, and he's mentioned about using the asset side of the balance sheet. There's also some talk about revaluing those certificates to give the government an extra, depending on what they value it, because it's still sitting at 42 something ounces, $42 and a few ounces. And if they revalue that up to even current spot price, 3,400, let's say, roundabout, that gives the US government an extra $1 trillion to use, or to pay off debt, or for him to not issue new treasury debt. What are your views on that, of a revaluation going on?
Two different components. First is what Scott Bessent said the week after he got it raised to the Treasury, which now he's kind of denying. Yeah, we're going to revalue the asset side of the ledger. There's only one thing on the asset side of any government's ledger, and that's gold, if they have it. Now, Judy Shelton, though, made a more important recommendation, which actually falls more in line with this, where she said that what the U.S. needs to do is to issue a $5 trillion bond backed by our gold reserves, payout over 50 years. Okay. Now, that's an important number, because in order to have, so in essence, what she's saying is, let's do exactly what Roosevelt does and set up a $5 trillion pool of money to rebuild the U.S. Well, if you're going to back it by the gold reserves, that means that 8,900 tons would have to be priced at least $20,000 an ounce. Again, everybody's like, what are you talking about? Well, that's exactly what Roosevelt does. On May 5th, 1933, he creates a brand new pool of money devalues the continental dollars and all the debts that have been written in that money, but he creates a brand new pool of money that funds the new Deal, the Hoover Dam, the Lincoln Highway, all the infrastructure get rebuilt with that pool of money. Well, why can they do it again? Again, you got to think out of the box, but that's exactly what they're saying. Now, why is that important? Because in order to do that, the first thing he's got to completely rechange the system. Because you got to understand that the current system funded by the petrodollar or the current dollar, which is credit based, was we're going to produce cheap things in China, funded with our debt, and then bring them back home at a cheap price. Well, what Trump is saying is we're going to completely rebuild our economy. We got to rebuild our infrastructure. We got to rebuild our cities. We got to build our train lines, right? We got to do what China has been doing for the last 20 years. Well, you're not going to do it with the old dollar. You're going to do it with this new pool of money. And that's exactly, if that's exactly what they're saying, to redo what's been done throughout history. So, you know what? I'm going to bet with history on this one, because it's the only way forward to get rid of all these debts in US dollars. And he who wins in that is those that control real money, because that's where the value is coming.
Yeah, it's a very good point you raised about history and that same historical perspective as well, because when they confiscated the US citizens' gold, they paid them $20.67. Obviously, it was forced that he had to hand it in, otherwise, you went to jail or it was a $10,000 fine. Same things happened in New
No, that
Zealand.
doesn't happen until they switch over to $35.
Yeah, they buy it at 26. My thing about history,
Yes,
what
they
I've
buy at 22.
yes,
That's right. They buy it in the 20s. And then after that, on May 5th, they do the reset. Correct. And that's when they said, okay, from this point forward.
yeah, they've literally devalued your currency overnight. So the government knows what they're going to do. They paid you $20.67 and then they repriced it at $35. So they literally devalued your dollars, which is a very good example which you're giving, by 80%. But if that was to happen now, you have to own the gold beforehand. It could literally happen over a long weekend. As I've told people, it could literally happen over a long weekend. And suddenly you wake up, and if you have the gold or the silver, you could find yourself very wealthy, which takes us to Jaime. I know you're a big fan of all of this, the gold, silver, and you look at miners. Can you give us your end game investment thesis? How have you been seeing it, and how have you preparing your clients for it?
Well, you know what? First of all, when it comes to the physical, I always say look at physical as no different than your savings at the bank. Have some physical as your savings. The real opportunity, though, lies in the producers, because the producers, and we're starting to see it already, and it happened in the 80s, it happened in the 30s. The producers are the prime beneficiary, because at the end of the day, you're still money becomes money again. And the only way to get that money is to get it from the producers, right? So the producers are going to still be producing it at what's the all-in sustaining cost? I think $1,600. Well, here we are sitting at $3,400 gold. The profitability of the company is great. Well, guess what though? If they do reset and gold goes to 10,000, they're still going to be producing at 1,600 axis. Well, do you know what's going to happen to the dividends of those companies? Exactly what happened in 1933. That and it happened in 1980. Now, two people that I follow, one was Egon von Greyer's out of Switzerland, made the same point, and Rick Rule made the same point. One from the equity side, the other one from the dividend side. Rick Rule said, this is very similar to the 70s, where I had a $10,000 investment that went down to $2,000, only to see it grow to $100,000 by 1980. Egon von Greyer's made the point differently. He said, I put in $10,000 in the beginning of the 70s, but by the 80s, I was getting $10,000 in dividends, right? So he's looking at the dividend side, right? And that's exactly what happened in the 30s, because what happens when we go through this period is the productivity of the producers that really kicks in, because first of all, they're making so much money that they start to produce great dividends, right? So go back to 1929. If you had $7,000 in the Dow versus $7,000 in Homestake Mining and Alaska Juno, which were the Barrick and Goldcorp of the time, the two biggest companies, okay? The $7,000 in the Dow, by the time Bretton Woods gets reset after the Second World War, has only turned into about $3,500. but the $7,000 in the two companies turns into $90,000 in equity, paying you 10% dividend from starting around 1935 right through to Bretton Woods. True fact. So the $7,000 you invested was being paid to you at a rate of about $9,000 in dividends. Well, guess what? A house then was $3,500. So prior you could buy two houses. Now you can buy two houses every year on the dividend being paid to you. That's why I'm backing the producers, because history dictates that they're the ones that are going to be the prime beneficiaries as we go through this transition, because they're producing real money that the world needs. Look at Canada. We don't have any gold. Yes, they might tax the productivity of the companies, but our government's going to need gold because our dollar is going to be so depreciated that the world is functioning on gold. How are we going to trade with China? How are we going to trade with the world? Right after we go through these world wars that we're having, we're going to have to reset peace and find a common ground. Well, and that's what I'm more concentrating on the fact that we have an opportunity. If history is replaying as history dictates, and if you understand history and economics, we have an opportunity in front of us to position ourselves to have multi-generational wealth. Because first of all, the companies have finally started moving, but for the last couple of years, the companies have been trading as though they're producing pet rocks. And why is that? Because if you look at your average pension plan, 1% of the money of Western wealth is sitting in the sector right now. They haven't figured it out yet. Never mind getting to a 6%. The last 4 times in the last 100 years that we went through periods like this, that allocation got up to above 20%. From 1% to 20%, guess what? My producers are going to be worth a lot of money, more than NVIDIA. Now, let's talk about the sector itself. One of the neat things is I follow Agnico Eagle like crazy. Well, their free cash flow margins this past quarter was tracking almost 49%, getting close to 50. Guess what? That's greater than NVIDIA, and only about to get better because the price of gold and silver is going higher. Now, that is starting to kick in within my silver producers now, where we just saw First Majestic's free cash flow just kick in, and it came in at, I believe, 29%. Well, that's a much faster jump than Agnico did when it was trading around $60 right off the bat, when it went profitable profit margins, which is exactly why I like the silver producers, because they have a greater leverage to the price of silver, but the price of silver has to go even further to catch up to the price of gold. So I think it's an amazing setup for those that can think out of the box on how do you position your investments right now, at least to have an allocation. Now, allocation's key. Under normal circumstances, the traditional models that I was taught at Merrill Lynch was to have at least a 7 to 8% allocation in the sector. Right now, the minimum I have, my most conservative clients, is 30% to capture that benefit going forward. And I think eventually that's how I think we have a massive opportunity for those that can think out of the box and can position themselves outside of the generalist advisors that are out there,
who are just saying buy bonds and buy shares. Just going on that, how do you actually pick, if you don't mind going into a little more detail, so how do you pick your miners and producers and actually value them? Is it ounces under the ground, or is it warrants or dividend payments?
Look at 4 things: management, the quality of the management team, the reserves on the ground, and we're not talking about exploration companies. That's a different animal. But you have developers, companies that are building mines, and then you have the producers themselves. Management, reserves on the ground, cost of production, and the most important factor is geopolitical risk. Where are those assets located, right? And I think if you stick to those 4 quadrants, you're going to do very well. And then how to position your balance between gold and silver companies is also important, because the golds have taken off, but the silvers are just starting to build their momentum. And I think they're going to go further.
Yeah, you mentioned something about jurisdiction risk out there as well, because was it Burkina Faso in Africa, supposedly right now?
Great example. Yeah, exactly. So Africa, I mostly invest in the Americas, because coming from Chile, having worked for Scotiabank, having, my career is Latin American centric, but I have started to diversify out of Latin America and the Americas. I love the U.S. The U.S. has been a great place to invest over the last 3 years. We were picking up a lot of cheap assets, And now I think Trump is going to be great for mining going forward, and the liberation of mining assets and getting everything rebuilt in the U.S. But I got involved with with Morocco, for example. So that was the first African place. I've looked at Europe. I look at other places. I have assets in Mongolia. I really like that mining jurisdiction. But for the most part, I like Chile. I like Argentina. I like Peru. Colombia and Ecuador, I see a little bit. Mexico, for example, I think Mexico is a great place to invest right now if you have your permits. One of the beauties is that socialist governments tends to be very predictable, and they always you have to approach it from a bottle half empty, bottle half full, right? So look at what the socialist government in Mexico is doing. They're not allowing for any more permits for especially open pit mines, maybe for underground mines. Well, that creates an opportunity to the producers because all it means is that there will be no new projects coming down the pipeline, which means that it's going to make the current projects even more productive, right? So you got to properly allocate where you're going to go. Now, the other thing is, I don't think much is going to change in Mexico because they're so close to the U.S. Geopolitically, whether we like it or not, Canada and Mexico are tied to the U.S. We can't go, we can talk all we want about supplying things to Europe or Asia. Well, guess what? We don't have the rail capacity or the infrastructure to send our stuff to the port so that we can send it to Europe. It's very little. Whatever we produce in Canada is mostly geared, and we built it to go north-south. So our biggest trading partner will be the U.S., whether we like it or not. And I think Carney, by giving up on the elbows up, elbows down thing, kind of fessed up to it, even though they're not going to admit it. But it's happening. The U.S. is going to be our most important trading partner. So how to position yourself? I look at all of that and look at the geopolitical situation where I understand the governments, where I understand what's going on. So I like what I see in Bolivia. Bolivia seems to be turning. I've never invested in Bolivia. I've looked at it.
Argentina is doing quite well under Milei.
Argentina's great. Yeah. And a massive change with Milei in that he's increased the profit margin for developing mining companies because of the bureaucracy that he's cut off, right? Which is great. You don't have to go through that whole long-term process of building a mine. So Argentina, all of a sudden, is a great place to be. And I have been buying assets or looking for assets mostly in Argentina and the U.S.
Yeah, yeah. I've heard good things about Argentina. And this is a simple example. As soon as the socialist government gets out of the way and just lets industry do what it needs to do, a country can turn around and actually flourish in a way. Hey, one thing, Jaime, I want to ask you, because you did mention that, and you've mentioned Canada has a lot of mines, Australia has a lot of mines, and Canada, Australia, New Zealand, countries like that have no gold on their reserves, or very little gold compared to.
No, I think Australia has its. I think Australia still has its gold.
But my question comes back to if these countries are actually, they have so much gold in the ground. Let's say we're going to World War III. You did mention geopolitics. We could go there for a little bit. What is there a chance that countries like Canada and Australia could nationalize their mines at all? Is there any chance of that just to back their currency?
No, I don't think so. I don't think so because I think Allende taught even the socialists that nationalization doesn't work because it just cuts off your production, right? You're going to need to produce it. So I think what they're going to do is tax it. I'm betting on taxation of the assets. I don't think nationalization. Because then what will we end up is with an even bigger depreciating currency, right? So no, I'm not betting on nationalization, nor am I betting on leaving Canada. I think this is a place to be if you properly position yourself to have a transition of wealth to you as everybody is suffering economically. You're better off, and you can position yourself for after that occurs, right? So I am positioning myself to think long term as to how to get through the storm for the other side, right? So that's why I'm thinking long term investments that I can hold. They might tax capital gains. Well, I'm not planning on selling my investments because, it's funny. 2015, I set up my portfolio that I manage, and at that point of the 15 holdings at that time, only 2 were paying dividends. Now, within 30 holdings that we have almost 8 now having dividends that have kicked in, right? So that that historical precedent of dividend within the producers is also playing out. I'm a long-term holder, and I think that as investors, from a Latin American experience, governments change. We go through these processes, but you have to also prepare for the worst of the storm to get through it. And once you get through it and you do the cleanup, if you're on the other side, you do extremely well, to go and acquire assets, especially if it's coming to me as dividends. Well, what am I going to spend them on? I manage an equity income portfolio where it's blue chip dividend. Well, there I have pipelines, utilities, all the things that benefit from inflation, but will devalue because pension plans will have to raise assets. Well, within that, it's 30% in precious metals that are growing, right? So I'm able to diversify and pick up those assets at cheap prices, right? So it's how do you position yourself that I think it's important to benefit from the shifts that are occurring.
Yes, it's. I actually tell my the people I advise as well. The times we are about to go into is not about how we're going to get rich quick. It's about while 90% of the population around you is losing their shirt and most of their wealth, you just got to hold on to it. It's about wealth preservation. And as you mentioned, sometimes assets like gold and silver, which are and commodities, are so underpriced because the credit bubble has allowed things like housing and shares and bonds and the bubble to go up. When those deflate, the commodities are going to go up. And if you're positioned there, you're not going to necessarily, well, the wealthy people hold on to gold for generations, it's generational wealth. But some of these things might get overpriced at some stage, and maybe housing does get underpriced at some stage, depending on whether we go into hyperinflation or deflation. And that is when, if your asset allocation is right, you shift from one asset type to the underpriced asset type. You don't have to necessarily stay in gold or silver for the rest of your life. But given what's coming up,
Well, yes and no, because it's funny because, um, you know, 5 years ago when I started positioning people with the idea of a monetary reset, that was more of an idea, a conceptual idea that this could be the way that things play out. I think now it's inevitable that we're going to go through a proper currency reset. If we are in a currency reset and I'm invested, I'm not getting out of my investments for a long time because I'm going to let the dividend pay out and then use the dividend to buy assets, right? So what road are we going to take? I think the reset back to a sound money system is inevitable, and in that environment, I'm already set up, and that's where everybody's going to want to be, after.
exactly, I don't think you're going to sell it. If the government came out tomorrow and said, I'm going to pay you $20,000 an ounce, I don't think most people in America who actually understand what's about to happen would actually even sell it at that, because there's a secondary price which the market will do for you, not the government is. And I think people will hold on to that. And that's why, obviously, you need expert advice. This channel is not about financial advice, but understanding these things and how history has played out in the past to understand how do you get to the other end. I know you say silver is the GOAT, greatest of all time. Do you
Yes.
just want to explain your investment thesis behind that for us, please?
Well, it's funny because, for 4,000 years, even back to the Roman monetary system, the centarius, which was the gold coin, versus the denarius, the silver coin, the pricing ratio was that one gold coin was worth 16 silver coins. Why? Because throughout history, when we mine gold versus silver, for 1 ton of ore, we pull out 16 ounces of silver versus 1 ounce of gold. Okay. Last year, we mined 130 million ounces of silver globally and 900 million ounces of 130 million ounces of gold and 900 million ounces of silver. So the price ratio should be 7-1 based on how much we're mining. Well, the paper price ratio or the fiat price ratio right now is 88-1. It got as high as 100. So what I'm betting on is that history is going to repeat. Nature's balance is going to recover. So I've been overweighing the silver companies to allow for that repricing to kick in because it's going to affect the levered earnings of my companies extremely well as the price catches up. And my plan right now is to hold my silver companies until we get to at least a 40-1 ratio. Then I'm going to diversify and make decisions. but I'm going to continue to hold my silver as my gold until we get to wherever we're heading. But that 40-to-1 price ratio is always the catalyst for change. And by the way, that has replayed over our lifetime. The gold silver ratio, if you look at the relationship back to the 80s, the 90s, we always go back to that overbalance.
Yeah, the historic one as well, because people say the Dow is overpriced, and the historic ratio of the Dow to gold has also been in correction times gone to 1 to 1. And some people, as you said, Warren Greers has actually even said it might even go to 0.5 to 1. And gold is the first to the party because it sniffs out what's going on in the macro world or the geopolitical atmosphere. And then silver is its little sister, and it just carries on and follows it. And obviously, as you said, I've heard some people say it could go back to the closer to the tens, but at least even if for 40, if you think about it, where we're now, that is a great upside, obviously, to have.
Oh, exactly. Yeah, and so that's why I'm thinking more of the ratios instead of worrying about the price. One of the problems I see in today's environment is that everybody's worried about price down, up, price up, instead of taking an allocation, like having an allocation in the sector. Now, by worrying about price, what do we have? Is that only 1% of Western wealth is in the sector. Instead of having an allocation, say, okay, I'm going to own 5, 7, 8, whatever the amount is, and just take that position and wait. And I think that's what's more advisable, right? Just to make sure that you have your seat in the financial Titanic's lifeboat versus worrying about what is the price of the lifeboat, right? And so because of that, I think that allocation is key. How do you position yourself? Like I have a pretty clear um, game plan, and I'm going to stick to it because that way I don't worry about the fluctuation in price. Why do I say that? Well, hell, by the time we get to 40-to-1, is gold going to be at 4,000, 5,000, 10,000, 15,000? I don't know. But I'm going to let them run by worrying more about the relationship between the two.
Yeah, and I've also heard someone like Jim Rogers say he's never ever sold. He's a legendary investor, and he said he's never ever sold his gold, and he hopes to pass it on to his kids. And he's also said that silver and sugar are the two cheapest commodities in history because the nominal highs have been 50 in the 80s, and also during 2011, and today is 34-ish US dollars. So it's cheaper now than it was even in 2011, whereas everything else is gone off with inflation, flown into the atmosphere. So, do you think at that stage, maybe I've also heard some people say that that is when they might swap some of their silver for gold if they're
Well,
building up?
that's exactly that's my I love buying physical silver. I've been doing it for a long time, and that's my gold strategy. I have a lot of silver that I bought over the years, and I'm going to convert it to gold when we get to at least a 10-to-1 gold silver ratio, because I think we always go to the other side. If we get to 1-to-1, great. But I'm gonna switch it all to gold and then leave that for my patrimony. I also think in terms of patrimony, one of the things for people today is that they only think about themselves instead of thinking about, okay, what about my family and whatever's left behind. It's funny because this goes back to Giancarlo Losez, an old client that I had, who said to me, he was from Italy, from Florence, and he had tracked his money for 500 years, right? And he said our family wealth has transferred through real estate, art, and gold. Everything else, all the other currencies, haven't mattered. Those three are the only things that for the whatever amount of generations that he was, and they still own the villa in Florence, um, that wealth transfer through. I think Indian people would understand that. Asians definitely understand that. Latin Americans understand that because we've gone through the inflationary crises of the past. But I think North Americans are a little bit, you know,
Blase, they've been.
well, they're blasé, but they're also nouveau riche, right? They've never really had wealth. It's the middle class that has taken advantage of the great lifestyle we had because of the credit bubble. But by the same token, they're also the biggest ones at risk because they don't understand wealth, right? And that goes as well for a lot of the advisors in the system.
They feel wealthy in the Western cultures. They feel wealthy because their wealth is based on if it's a bank balance, it's a credit, or if it's your house, which is credit. So when the credit system collapses, anything that is linked to credit could also collapse in value.
Correct. Correct.
This is what the Western thinking caps don't get on, or the average citizen doesn't get on. your house will not necessarily your house will still remain a house. If it's 3,000 square feet, it'll still remain a 3,000 square feet. But if you thought it was worth 3 million, it could be worth 500,000 because it was credit induced pricing on an asset that somebody else might not have the credit approved to buy from you.
Correct. And then at what interest rate are you paying your house for? That's what happens in the 80s when interest rates finally spike, because everybody was borrowing at zero and now they have to borrow at 8%. Well, you can't borrow $1,000,000. You can probably borrow 100,000, right? And so, yeah, we go through the cycles, and I'm positioning myself to benefit from the cycles.
Thanks, Hamid. Just one last question on this. What could happen out there in the world, whether geopolitics, war, monetary policy, anything that could change that would make you reconsider your position at all?
Look, I figure that we have only two scenarios. Either we go into World War III, and that's a nuclear war, and then all the bets are off. But I'm an optimist. I think what we're heading for is a complete reset of the global geopolitical structure, led by Asia. The U.S. will take a back turn, but the U.S. has to rebuild anyways, right? So the U.S. rebuilds. I think Europe is they're going to be in the biggest mess because they have the biggest credit bubble and they're not even aware of it. I think it's good for Africa and the Americas. The Americas always tends to do extremely well when we go through this process because internal economics kick in. And I think that's going to be all fueled as well on the back of China. And China has billions of people that, China of today is not China of the 1980s when Nixon starts his process. I love looking at China because look at what they've done with their infrastructure. They have debt, but they've spent that debt in building 24,000 kilometers of high-speed rail. How many thousands of kilowatt hour of electricity are they producing? Yes, they're using coal, but they're also producing nuclear plants at a very fast rate that eventually will kick in. Look at the U.S. What have they spent their trillions of dollars? Endless wars. So it's great for the military-industrial complex, but as Eisenhower warned, another guy from the class of 1907, right, that has to change, right? And so that change is really what I think is more important to me, in that the U.S. has the wherewithal to rebuild itself. They just need good leadership. As Churchill said, they'll try everything until they try the right thing. And so that's why I'm optimistic of the U.S. I think Asia comes out ahead. I love what the BRICS are doing. And with Brazil in the middle, it's good for Latin America. India, the changes that are occurring. And you know what? It's funny because all of these Trump-induced changes of tariffs, look at India. It's forcing them to finally swim on their own, right? And I think that's important because that's what these countries needed, was a kick in the butt to start functioning outside of Western influence. So that's extremely positive to me because I finally see the world rising outside of Western influence. So to me, and I look at history, we're witnessing the end of the Anglo-American Empire as structured since the 1700s, right? And the rise of a completely new world. I hate the world order, but a new restructuring led in a better way by a global system where we finally begin to understand each other. That's the other problem, is that, at the end of the day is we need to have an understanding as humans and an acceptance of each other. In other words, love, right? Love and caring for each other. And I think that's also changing. So from a big perspective, I'm very optimistic of the future as we go through this economic cleansing that we have to go through. The problem is that people aren't preparing for the cleansing, which is what I'm kind of doing looking forward.
Yeah, I'm looking forward to it as well. Sometimes I'm like, can the system just bloody collapse so we can get to the other end of this? But I know there's about 5 or 6 years to go before the way this plays out and stuff. And in fact, my view is China will be the new financial capital of the world because also, as you mentioned, they took on debt, but they used it productively to build not only factories and all that stuff and railways and roadways and all of that stuff.
Let me say something about China that is funny, because first time I noticed how China was filtering into Chile was in the mid 90s when I started traveling with Bank of Montreal to Chile, and I became friends with economic attaché because he happened to be at the same hotel that I was at in Santiago. And he said to me, our biggest misconception is that we got to figure out how to be understood. And that to me was, oh, wow, never thought about that. But then I started thinking, and I've watched China, how they've dealt with Chile. Okay. So Chile is the biggest copper producer in the world. Prior to the 1980s, the US was the biggest exporter of that copper, and it was paid in US dollars. Today, all that copper goes to China. But China's approach to Chile was completely different than the Americans. The Americans, Allende comes in, he nationalizes the copper, which I said was a problem, but then they kill him and institute a completely different government to work under what the US wanted, right? So complete imperialism. China, on the other hand, they went to Chile and they said, hey, we need that copper. What do you need to get it out? Well, they helped to build a new harbor between, they did the same thing in Peru. They've helped with the infrastructure, but they've never, ever have tried to change the government. They said to Chileans, you guys do things the way you want to do them, but we just got to make sure that that copper gets out of the ground and we have access to it, which they do. The only piece of the puzzle missing is the fact that why do they have to continue to pay in US dollars now? So China's approach to the world has been completely different than the American approach or the British approach, which was, or the French approach. Look at what's happening in Africa and go back to Burkina Faso. Well, yeah, colonialism ended a long time, but not monetary colonialism. And these countries are waking up, right? So why should the price of uranium be so low in Africa to the benefit of the French who are using that uranium, right? So that's the positives that I see about the world rising, and China is leading that because they're also helping these countries to develop. So to me, it's a better feng shui going forward, a better karma in terms of how it's being done, and I see that very positively.
I think as you mentioned, obviously they say you get more honey with sugar, and that is exactly what China is trying to do. Whereas the Western imperial cultures that you've said have tried to put their boot on people's faces and tried to be the bully in the room and get all of these resources. And what I found recently was Russia standing up finally, especially when this happened with Ukraine. And again, I am going to definitely bring you on again because we will need to talk geopolitics and macro, what's happening with the BRICS countries and all of that in the future. We'll get you down the track. But I think Russia finally standing up and China knowing that they've got to back Russia, because if Russia collapses, they're going after China next. And the BRICS countries are now becoming powerful. There's about 40 countries lining up to actually be part of this. And it could actually then split into a bilateral system rather than the US being the hegemony. And I think US is still fighting for that spot. Europe's already gone. Europe's gone. I think the euro collapses over the next 3 years, as you're seeing what's happening in the UK and France. But I think it is good to see these Asian economies, ASEAN, as you would say, also binding together and supporting each other because they're the ones with all the commodities and the resources. So they do not necessarily need the Europes of the world, and they can trade amongst themselves. Anything to add to that?
Yeah, that you know what, it's silly not to understand those changes because they are happening. It's here, and if you don't see it, I think that
You miss out.
you're living in a bubble. Exactly, and those changes are inevitable and they are occurring. And gold, silver are at the core of it. Definitely gold, but it is a geopolitical shift that's going to reshape our future, the future of our children. And to me, that's the benefit. That's the opportunity. The fact that, hey, most people here still don't see it. That's all right. I don't care if they don't. I do, and I'm positioning to benefit from it. I'm positioning my clients to definitely come out ahead of it. In the same way that, it's funny. I look at my family. I left Chile at the age of 11, came here, but my family stayed in Chile. And when I looking backwards, visiting my cousins, is how well some of them came out better than the others because of what they did, you know. And so how to position yourself has always been important to me because those things repeat. And that I think is what's important. Why history and economics always abide.
Yeah, always repeat. Yeah. Hey, you've been pretty gracious with your time. So I like ending our interviews with just a few questions so the audience can understand who Jaime is and you as a person. What books would you recommend to your friends most often, Jaime?
Well, you know what? My favorite book, and it's so pertaining to this world today, is Anne Ryan's The Fountainhead. It's a key example of the individual versus the collective, more than Atlas Shrugged, which I've always fall asleep every time I pick up that book. Then some good economic books. Ray Dalio has written a number of great books. History, I think it's important to, and the number one history book that I always recommend to people to understand the world that we're living in is The Great Wave by Hackett. He's a historical economist, and as a society, we've been great at tracking prices through history. Well, what he does is he starts the beginning of tracking of prices back to the 1300s, and through that book, you can really see the economic waves that are always repeating. It's a great book, The Great Wave. But for personal must-have is the Fountainhead for me is, I gave both of my boys when they turned 21 a first edition of that book because it really cemented the way I think and the fact to stand out on your own as an individual versus what everybody's thinking. Because sometimes the collective is wrong. And when that occurs, it creates a lot of opportunity for those that can think out of the box, right? And the world is not run by the collective. Those that create change, the Da Vinci's, the Teslas, those are the individuals that have always stood out and create change.
Yeah, the collective is generally wrong. We saw that during a bit of COVID as well. And if you've got to be a good investor, you've also got to not follow the herd. But we humans are herd animals. And sometimes it's nice to feel wanted and following the crowd. But most people don't get. Most successful people are the ones that think for themselves and are individuals. Thanks for that. We'll add the book in our link.
And I have to say that from an investment perspective, only 1% of portfolio managers are in the sector right now. Of the 1%, you can count them, those guys, those people, and I'm to be within that group, the Rick Rules, the Tavi Costas, those guys that are out there that have stuck to the sector. I'm very happy to have been part of that. It was, the last 3, 4, 5 years, it's been hard, but I'm not here to be liked. I'm here to advise people on what I see and how I see it, and to be honest to my call. And that's what I've tried to do to be honest in terms of what you have to do to survive in the environment that we're heading for. And now I think that what I was saying years ago, it's clear, it's happening. There's no debating it anymore.
I think that's it. It's not about being popular. It's about you being a good uh, safeguard of your client's wealth and giving them the right advice. Because in hindsight, as you said, it's been a bit tough for the last 3 or 4 years because governments and central banks have created so much liquidity, but now it's starting to pay off. And I say you rather be a year too early than a day too late, and that is the whole concept of smart investing, isn't it?
Well, it's funny because in this environment, being a year too late also means that I own way more companies that I really want to own going forward
Yeah, yeah.
at very cheap prices.
And that is it. Because you're early, you can get them cheap because then the investors come in, then the hedge funds come in, and then the average person comes in. By that stage, some people are already liquidating their assets. So it's about being early sometimes and seeing what's coming rather than standing in the way of the train coming your way. Hey, we move to the next question. I'm really interested in this one. If you weren't in finance, where would you have been?
You know what? I don't know. I've never really worried about where I'm going to be. I've always followed. I believe that life is sending you signals, and most people aren't listening. But I also think that life is like a river. All I've been doing is following the current that has taken me here, and so I probably would be exactly at the same spot if having been given the same river. So yeah, no, I love the road I've taken and where I'm at.
Yep, yep. No, thanks for sharing that. Just one last question for you. And the audience knows I have a financial consultancy called Success Simplified. So I'll ask people, I like asking people this last question. Jaime, what is success to you? How do you define success?
It's funny. I went to a client's funeral, Don McLean, and that's when you finally see success. The people that were there and what the words that were said. I think that success will come after your life in terms of how the people that you helped along the way um, feel about you. And that to me was unbelievable. The legacy that this man left behind and the people that he helped along the way. And so I think that that's how I would judge my success in terms of when all this is over, all the people that I helped through and to get through it in terms of how I saw the world shaping up and the setup of what they needed to do um, to prepare to get them through. And I'm very comfortable with that journey and where we're heading. And I think more and more clients are definitely now on board because we've gone through the trough. Now we're starting to see these things inflate beautifully. And so it's happening.
Hey, that's a perfect place to end. Thank you, Jaime. I reckon listeners learn more about you and your work.
Twitter and LinkedIn, but mostly Twitter. That's where I'm always, I've been a little bit lax because it's the end of the summer here in Canada. But come September, it get busy. Then I'm off to Beaver Creek, where for the big mining conference in the U.S. and should be very busy fall coming forward. But Twitter and LinkedIn is the best place to follow us, or just if anybody wants to find out more about our practice, send an email, and we're happy to chat with anybody. We have clients all over the world, including Europe. No Asians yet, but we can manage Asian money as well. And it's about positioning yourself.
Yeah, fair enough. I'll put the links for most of these and the books you've recommended as well, so the audience can get in touch with you. Hey, Jaime, I would really like to thank you for your time today. It's been an honor speaking to you. Thanks, mate.
You, it's a pleasure. You've asked good questions and a good roundup of the discussion. Thank you very much.